We have some movers to keep an eye on here, and joining me right here at the desk, Schwab Network, Sam Vadas is here because we want to take a look at a big rally that's happening in Wayfair.
Yes, a 52-week high this morning as we get up and running for trade on Monday. Nicole, we have got Wayfair on the way up this morning, sitting up 11% higher at 72 and change. It comes off the back of what has been a fairly impressive earnings report out from that company. Let me run you through the numbers here because we are seeing a considerable pop. Investors cheering what they're hearing here. Adjusted EPS of 87 cents versus 36 is what the street had been expecting there on revenues of $3.27 billion, which, as you can see there, was also a beat against estimates of $314 billion. So the best quarter since the pandemic, when people were running out to get furniture, which is interesting and certainly good news for this company, given that we have seen a weak performance generally for this category with regards to home furnishings. What this tells us is that Wayfair is gaining market share perhaps versus some of its peers. Now, let me talk you through some of the highlights from this because it was the highest revenue growth and EBITDA since 2021, as I mentioned, when you had the pandemic, people staying at home, so they wanted to furnish their house with stuff that they were actually going to use. Raked in $3.3 billion, as I said, 5% higher, which was better than what the analysts were expecting. And we have seen this company saying that it has been going through, obviously, restructuring, layoffs, and also shutting down its business in Germany. That has impacted things just a little bit, but there has been a lot of hope and optimism around the fact that this company does believe that the US demand can offset that, particularly with regards to Germany and the active customer count. Now, the order value was higher, and that was put down to also the higher end brands, goods that are at a higher price point. So people seem to be willing to pay that premium a little bit more for some of those goods, and that seems to be working for the company as far as that order value is concerned. Now, it has been trying to make things better for the customer as far as that overall experience is concerned, including quicker shipping times with regards to its products being more available, competitive pricing. It has also helped the company's prevalence, as I mentioned, in the market with regards to its positioning here when generally furniture, and we are seeing a weaker performance in that sector. It does rely on third parties for a lot of that, we do need to remember, but it does set prices, and we're yet to sort of see the impact on prices just yet from those tariffs. Now, obviously, that's been a big question mark for a lot of these companies, particularly in the business of retail. Let's talk about the stock because, as I said, one of the outperformers today. I do believe it is up nearly 50% this year. It's been up 14% in the pre-market. So we're seeing it coming off a little bit right now, but still sitting up a healthy 10%. So a very good earnings report from Wayfair.
And it's amazing considering, you know, all the worries that everybody has. But look, they're spending. They're seeing the demand. What a recovery that this has soared. It went from $20 to $71.
Yeah.
Just nice to see folks. But, you know, fewer customers, but paying up. That's really also a very big theme I think we're going to see all around.
Exactly. And we're going to be hearing from more of the retailers, obviously, Nicole, as to, you know, what sort of consumer trends we're seeing out there. But it's interesting because, of course, to the point that they were making, I mean, the best earnings since the pandemic, when everyone was rushing out to buy new counters and stuff because they knew that they were going to be sitting on them a lot more often. It's interesting, you know, as far as some of these consumer trends, why people are going out and buying, you know, more home furnishings. And as you say, at a higher price point, you know, what the sort of thinking is behind why they're actually doing that.
All right, next up, Onsemi. I see it's down about 6.5% today.
Yeah, it's been a bit of a case with a lot of the semiconductor stocks that we've seen throughout the course of this earnings period, Nicole. So we are seeing that down almost 4%, 53 and change right now. We had that earnings announcement before the market opened. It was more or less in line with expectations. You had EPS of 53 cents versus 54, which is what the street was expecting. But revenues were higher, 1.47 billion versus 1.45 billion. This seems to be a case, as I mentioned, where we have seen things pretty much coming in line with some of these semiconductor stocks, but investors just wanting a little bit more perhaps. Got to keep in mind though, while revenue was higher than the street's expectations, it was down from the 1.7 billion that we'd seen last year. So perhaps the slower revenue and also the weaker margins are factoring into why we're seeing the stock under pressure today. There are forecasting EPS of 54 to 64 cents a share and revenues of 1.47 billion to 1.57 billion for the third quarter. So both of those ranges are more or less in line with analysts' expectations. So they've sort of met the bar. But as I said, it does seem like investors here, the street seems to be crying out for a little bit more from the company. It's made some reassuring comments. It says that its transformation is resulting in more predictable business model. It's talking about the strength of their strategy, commitment to long-term value creation here. They're seeing signs of stabilization, so that's positive. And then they also say we're well positioned to benefit from a market recovery here. But we know that the semiconductor components manufacturer, which is what it does, has underperformed the broader market this year. I mean, shares have been down around 10% this year, 16% or so over the 12-month period as well. That was if you look at Friday's close, and that was partly down to the fact of their exposure demand from the auto industry. So that's obviously the company's key end markets here. So it does, obviously, a company like this, like other semiconductor stocks that we've talked about who do have that exposure to autos, are contending with, the slower EV adoption rate, some of the supply chain disruptions here, Nicole, and the, obviously geopolitical uncertainties as well that many of these companies are dealing with. We have seen a little bit of recovery in the industrial segment. But, it really needs to show that it can sustain the market share in the key areas of its business. And we know that autos has been, this sort of cloud that's been hanging over a lot of these semiconductor manufacturers that are in the business of that.
All right. I mean, it's nice to see some of the end markets stabilizing. I mean, they did note the waning demand, but they're cutting costs, but they have at least a little more of a clear, predictable is the word they used, business model here.
Yes.
Let's get to Tyson Foods, last but not least.
Yes, so it was an earnings and revenue beat for this company. Perhaps speaks to why we're seeing this sitting up this morning, almost 4.5% higher. Let me run you through the numbers because it also lifted sales guidance for the fiscal year. So no doubt that's what the street appears to be cheering here. Revenue rose 4%, 13.88 billion versus the street's expectations of 13.63 on EPS of 91 cents versus the estimates of 72 cents. So it does expect sales to rise 2 to 3% in fiscal 2025 instead of coming in flat or up more than 1%, which was from the year prior, and also raised the low end of its EPS by 200 million to 2.1 billion, with the upper end still set at 2.3 billion. So we know that this company has been facing a few challenges with regards to the cattle supplies and also just overall market hurdles. The company has been sort of struggling, like many in this business, to pass that on to the consumer. Its beef and chicken prices have been rising, but it seems that the beef component of that seems to be a bit more of a worry than the chicken. The chicken seems to be offsetting things. They are seeing strength in that segment. So the beef sales were up despite volumes coming off. The higher prices, as I said, offset the volumes, but the chicken sales were up and they did see higher volumes there. This is very important information, obviously, because the company is the largest meat producer over in the US here, one of them at least, and responsible for about 20% of the nation's pork, chicken and beef supply. So it is good to see the breakdown here. The company's chicken unit, that was the highest adjusted profit since 2016. So that beat analysts' expectations too. So they're seeing good demand also for frozen meat and ready-to-go meals, which obviously they are known for as well. This seems to be down to a consumer trend where people are thinking about the hip hop pocket because of some of the economic uncertainties, tariffs as well, and preferring to cook meals at home. So it had been actually trading, Nicole, at around a 52-week low recently. There had been some concerns about obviously the beef side of the equation, encouraged by the chicken, as they say, but it is still down 7% or so year to date. I mean, if you look over the course of the last few months, it's been on a bit of a downward trend. However, the most recent price targets I've seen, I mean, last month Piper Sandler reiterated a neutral on this company, keeping a price target of 58. As I mentioned, we're at 54 and change right now. So they do obviously want to see things, you know, I think improving when it comes to the beef, but seems to be like the chicken is doing the heavy lifting at the moment.
Yeah, and pork. It looks like they're going to increase both chicken and pork.
Yep.
That part of it, the production, but the domestic beef production will decrease because, you know, even with higher prices, they're just not making the money on that.
No.
All right, Sam Vadas, great to see you.
Thank you
you so much. 3 key names there. We looked at Tyson, Wayfair, and Onsemi. Thank you, Sam.